Hi, my name is Jonathan Regan, also known as New Questions. Welcome to another blockchain education video. Today we're going to talk about losing and winning. We're going to talk about how to learn how to learn. We're going to talk about making sure that you don't make the mistakes that everyone else is making in crypto. And this is the sort of information you probably have not actually heard before, or at least you might not have taken the time to think about it and really let it bounce around inside your skull and resonate and really build itself into your particular approach to trading. Now, you're going to see me looking over this way. That's where my notes are. Put simply, if you watch this video today and you watch it again in a couple of months' time and maybe again in 6 months' time and 12 months, if you continue to come back to this video or something similar and you continue to remind yourself about what it requires to become a great trader, you will succeed well and beyond the vast majority. I'd say 90% of all the traders in the crypto market, simply because we tend to have, as humans, we tend to have this sort of innate ability to take it easy, to take it cruisy, to stop being disciplined. I won't say we're slobs, but essentially we lack discipline, and having a finite focus and a finite attention span is actually not great if you're a trader. You really got to be on the ball all the time. And what I'm about to present to you is a great way to stay on the ball and to always be winning and to basically make a life-changing income. So my guarantee to you is that if you swallow and absorb everything that I'm about to say in the next, say, 15-20 minutes, and you come back and you watch this video over again, and if you take notes on this video and if you stick those notes up on your wall and you look at them every day, you will pretty much outperform 90 to 95% of the entire market, and you'll be one of those guys that everyone's like, man, this guy or this girl, they really know how to trade. They literally go months and months without losing money. Consistent, overwhelming, life-changing profits, making money online through cryptocurrency trading. I mean, Bitcoin right now is the fastest growing, most insane asset class on the planet. And we have blockchaineducation.com.au, which is a course on how to trade it. What I'm going to do now is I'm going to show you sort of what I've learned from my own personal experiences, from the thousands of members that we've taught, from my partnerships with important people like my partner, the CEO, all these incredible traders, people who've been in the industry for years. I'm going to kind of distill everything that we've learned, what to do and what not to do, and we're going to put it in this video. And it's not normally something that we'd throw out there to the public, certainly not on YouTube. This is sort of premium content that we would normally reserve just for our in-house members, and the best in-house members at that. Okay, with that, let me just shout out welcome to our members. I know you guys are watching this. For those of you who have not yet joined, think about visiting blockchaineducation.com.au. We have a special discount coupon right now. And I think what you're going to find here is a sort of quality video that you can come to expect that will be presented inside Blockchain Education, regularly. Okay, let's talk about some of the older members. If you're watching this and you haven't quite got traction yet, if you're not consistently winning and you want to reboot, you want to restart, you want to start from scratch, everything that you've learned so far in our community, everything that you might have learned as a non-member outside our community, let's just sort of, throw it out the window and decide that today we're going to restart and we're going to apply some of these ideas. Right, without further ado, let's learn how to learn. Okay, first and foremost, learning how to trade is not like learning other types of disciplines. You don't go through an extensive years and years and years of training. You don't necessarily get tested by anyone. You essentially are tested by the market and tested by your own inner belief and your own inner sense of confidence. And it's a cruel testing. You don't get an F on your exam or your assignment or your essay. You lose money. And at the end of the day, if you've worked really, really hard in the labor market to make that money, then ultimately it's a pretty cruel punishment for being wrong. So I would suggest from the outset that if you're learning how to trade, that you have to be a little bit conservative. And although it's not a years and years process like it is at college or university or a technical college or something like that, it's still going to take you a while to learn how to trade to get to that point where you're consistently making money. Now, the way I like to look at it is, imagine you have decided that somewhere in your life you want to be a heart surgeon. Maybe your father's a heart surgeon, or your mother, or your grandfather. You come from a lineage of beautiful doctors who have been saving people and fixing their hearts for years. At the end of the day, you're going to have to go and do years and years and years of study to become a heart surgeon. And at no point ever will you be allowed to just run out into the street and start saving people left, right, and say, excuse me, so come over here, I need to chop you open and practice? You know, it's not going to work like that. You need to learn a certain amount before you can really start taking a risk. You need to learn a certain amount before you get the confidence that when you chop that guy open, you're going to do the right thing and you're going to save him. You're not going to damage him. And the same thing can be said about your portfolio value. You don't want to be taking tremendous risks and throwing around sharp scalpels, and you don't want to be doing stupid trades and essentially destroying your portfolio before you're ready, before you've kind of learned. Now, I did say a few minutes ago that learning how to trade in crypto is different. And at the end of the day, yeah, it is, because unlike the doctor's surgery, in crypto, the market's always there. It's 24/7. The temptations are there. There's other traders throwing around money. There's guys in our community making money. They're all happy and excited. And you're sitting there thinking, you know, it's not that hard. Everybody else seems to be making money. Okay, great. I'll throw my money. When you take a loss, it can feel pretty lonely, even if you're in a community of traders like Blockchain Education. We have a private chat platform, and really there's a lot of people there to help you, and a lot of professionals and technical support and tools and stuff. But when you take a loss, you know, ultimately, like I said, you're to blame. You're essentially going to punish yourself. The lecturer, me, or the head educator of the system is not going to say, oh, naughty, 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 you're getting an F on your exam. At the end of the day, your portfolio takes the hit. Your personal wealth takes the hit on a bad trade, a trade that you probably shouldn't have got into, because you're kind of like that third-year doctor who's confident but not yet ready to do open heart surgery. I hope this is a weird analogy or metaphor, but I hope it's making sense. Now, that's not to say that I'm sitting here advocating that it's going to take you 6, 12, 18 months to learn how to trade, but more that you have to understand that the market being one mouse click away is kind of like a peril. It's kind of like it's a distraction. It's kind of like, come to me. And even more so, margin trading on leverage is even more dangerous. That's why we don't teach it, because people just are not ready for that. They don't have a level of skill required to deal with the ups and downs. So in this sense, you're going to learn on the job. You're going to learn how to trade as you go along. Now, you don't have to risk real money. You can do paper trading and all that sort of stuff. And I got to say, if you're new to this, or if you've been a member, or if you've been a person who's been trading crypto for a while, you're probably used to losing. I'm afraid to say most people are used to losing. You probably wouldn't be watching this video if you were consistently winning. And what I would say is it's okay to lose. It's okay to actually lose money. It's actually okay to blow up your portfolio, to embarrass yourself, to essentially destroy your future dreams by blowing out your capital. It's okay. I know it sounds counterintuitive, but it's okay. And I'm not going to be one of those guys like, it's all part of learning and all that sort of stuff. No, I mean, you can make smarter decisions, but the end goal, the benefits of that outweigh everything. I mean, think about it. You've seen the pictures on the internet where the guy and the beautiful wife lying on the beach. It doesn't matter how old you are, or what religion, or what culture or race, or where you come from, or what country you're from. At the end of the day, if you learn how to trade, specifically crypto, you can make so much money in a fairly automated fashion that you can pretty much do it from your mobile phone anywhere in the world. You have all the time and the flexibility. You can make a tremendous amount of wealth. You don't have to worry about the 9-to-5 grind. You can quit your job. You can build up a massive emergency fund so that if you decide you don't even want to trade for a few months, no worries, just take a holiday. I've known members in our community, and I know guys personally, who will invest in a particular thing, either in traditional markets or in crypto. They'll go away for a 3-month holiday. They'll come back and they've made so much money. They might have made 30-40% in 3 months that it's just paid for the holiday. And they don't even look at their stuff on the holiday. It may be okay, maybe they're looking at their mobile phone, but they're certainly not trading. So this idea that with a few mouse clicks you can get yourself into a trade that could double or triple your money in crypto is very elusive, and there are people doing it. You just have to make sure that you learn how to do it correctly and that you don't blow your opportunity before you even start. Right, so that's the end goal. The exciting idea of a completely autonomous, free, liquid lifestyle where you can essentially do anything with your time while simultaneously making money on the internet trading volatile crypto assets. It's definitely worth failing a bit and taking a bunch of embarrassing hits and maybe, taken a few insults from friends and families who are just trying to look after you and trying to avoid the pain themselves. But at the end of the day, I would say that if you've lost a lot of money in this market right now, that doesn't necessarily mean that's the end. You're not out. You just need the right sort of guidance. And without sounding too egotistical, I think I can give it to you. I think our community can give it to you. I think our professional analysts can provide it. I think the CEO and the tech team and the tools and everything, I think we've got what you need. So if you're a member, you probably already realize that. You probably have this feeling that we know what we're doing. If you're a non-member, I suggest you join blockchaineducation.com.au, like, share, comment, subscribe, all that sort of stuff. Let's talk about specifically what you need to do. I'm just going to scroll down here because I'm checking out my notes. Right. Let's talk about the stark reality. We talked about the end goal, the dream, the exciting thing that you get at the end, but let's talk about the reality of today. And you're sitting there on the other end of the camera. You're watching me and you're thinking, does he even know what he's talking about? Now, I'll just leave that up to you to decide, but I'll tell you something that you and I can agree on. And that is that when you're trading, you're essentially against someone else. You're in a little battle. Think about that. You're trying to buy, they're trying to sell. Or you're trying to sell and they're trying to buy. So that moment when you feel the blood rushing around your body and you're like, you know what, I'm going to sell at the total top of this beautiful trend. I've trapped the reversal pattern. I think this is the perfect time to take profit. I'm going to sell. Somebody else is like, I'm going to buy. I'm going to buy. At the end of the day, for every buyer, there's a seller. For every bull, there's a bear. There's sentiment, there's technical analysis, there's a whole bunch of reasons why everybody thinks the way that they're thinking. But essentially, the market is made through disagreement. Where you decide to buy and where you decide to sell, that's the key to making money. And it makes you feel like that if there's only a buyer and if there's only a seller, that it's almost like a coin flip. It's almost like a 50-50, right? I mean, you can't be wrong all the time, right? Well, it's not 50-50. The probability is more like 80 to 90% that you're going to lose money. I know it sounds horrible, but it's even worse than, say, horse racing or playing cards at a casino. The odds are that the majority of traders are going to lose money. Now, not just in crypto, but in traditional markets as well. In fact, the governments of the world actually mandate that if you're going to advertise financial products, that you have to disclose what the average scenario is. You can't sort of present an offer that pretends you're always going to win. Ultimately, you have to kind of, in an advertising sense, mandated by a government law, you have to kind of say, 70 to 80% of the traders will lose money. And in crypto, that's probably even higher. It's probably more like 90%. Now, instead of being negative and thinking about the 90%, and instead of nodding your head and saying, yeah, that's me, I've lost money, I'm losing money and all that sort of stuff, let's just start thinking about what is the other 10% doing, the 10 to 15%? How are they making money? So we're going to talk about that. Before we do, let's just talk about the winners and the losers in the sense of a traditional market. In a traditional market, things like commodities, stocks, derivatives and options and the stock market and Forex and national currency and all this sort of stuff. There's brokers that control the spread, they control the liquidity, a whole bunch of other stuff. And most of the time when they refer you to a brokerage platform, they make money on a kickback, whether or not you lose money or win. So it doesn't really matter what they say in terms of the education or the guidance that they provide you. They know that regardless, you're just going to blow up at some point anyway, and that they're going to take their share. Important to understand that at Blockchain Education, we don't set a spread, we don't take any extra bonuses or any fees, we never take a slice of your capital, we don't do anything like that. Ultimately, it's between you and the exchanges. We're simply an educational service that provides entry methodology and exit methodology, and ultimately it's up to you. So we're different in that sense that we don't have a conflict of interest. Other companies are essentially going to say, we'll teach you everything that we know, and they know full well that what they're teaching is trash, and it doesn't really matter, because at the end of the day, if they blow up or they make money, the broker's going to make a percentage regardless. So consider that conflict of interest that exists in the traditional markets and why that might relate to the idea that 80 to 90% of people are losing money. Right. Let's once again go back to being positive. So is crypto worth trading in 2019, 2020? Absolutely. In fact, in the last 12 months, cryptocurrency, specifically Bitcoin, has outperformed every other investment class asset on the planet. It's the most volatile insanity there is. I think the stock market, the S&P 500 and the Russell index is up something like 17 to 21%. Gold's up about 13%. The bonds are basically doing nothing. In terms of other markets, nothing is outperforming Bitcoin, which is up as much as, I mean, if you were to buy Bitcoin at 3,000 and sell it at 14,000, you pretty much quadrupled your money. 100 to 400%. So nothing is even close. Now, Bitcoin itself, there's thousands of altcoins moving in and against Bitcoin, and part of blockchain education, we teach you what to trade. So in that sense, there's loads of opportunity to make money in the most profitable, most volatile, most violently exciting market, period. So if you imagine that the location is right, and that the activity is right, you just got to get your mind right. This is a very positive, bullish place. Bitcoin was only a couple of $100 about 5 years ago. It's now sitting at $8,000. It went as high as 20,000. We see these altcoins going up as well. So very exciting place. But keep in mind that we're not talking about investing. We're talking about trading. Now, trading makes sense so that if you go into a downtrend, you essentially want to sell it and avoid that downtrending period. That's trading. Investing, you might just sort of, I'll just accept the fact that I'm in a downtrend. I might buy a bit more at the bottom, but ultimately I'm just going to be passive. I'm just going to invest. So I'm very bullish on Bitcoin and crypto, and I would imagine that one of the things that knocks most traders out, and this is where we start getting into the guts of what I'm trying to say here. One of the things that leads to the largest amount of losses, the greatest impatience, the biggest problems that traders go through is their time frame on that trade, what they consider mentally acceptable in the trade. Now, if you're trading using a 15-minute candle and you're sort of trading a cyclic nature and you're looking for an uptrend and you're in that uptrend for 1 or 2 days and you decide, you know what, I'm going to stay in this uptrend for weeks, you're trading that 15-minute candle, which is essentially a pretty short duration of time. Now, if I said to you, if you were to look at the 4-hour candle, which is a much longer period of time, and you're in a sustained downtrend, that little 15-minute sort of quick trade that you did is in and itself a nice little thing, but it's in a longer term, more sustained, stronger downtrend. So if you know that you're in a downtrend which is going along for a long time, then you want to be very careful about the time frame that you use, the candle length. I mean, how long are you going to stay in a trade? Obviously, it works in the opposite direction. If you've been in a sustained uptrend for months and months and months, and you're in a short little trade and it goes down a bit, don't panic and sell, because you know you have the confidence of a long-term uptrend. So without explaining it a little bit deeper, essentially you have to make sure that whatever trading window is in your mind, you don't contradict or conflict with the overwhelming market forces that are pushing it in one way or another on different time frames. How you do that is best explained through our methodology, using different indicators and kind of cross-matching, all that sort of stuff. But I'll keep that in at the front of your mind. Essentially, your greatest chance to second guess yourself, to knock yourself out of a trade too early, to take a small amount of profit instead of a big amount of profit, and to essentially take a loss, your greatest opportunity to trick yourself into making a bad trade is by ignoring how different time periods work. Essentially, you started the trade thinking short term, and suddenly a couple of days later, now you're suddenly thinking long term. Or you started the trade saying to yourself, I'm not going to touch it for 3 months because I really believe in this long term trade. And when it pulls back 16% tomorrow, suddenly you're out of the trade at a loss. It's like, hey, I thought you said you were going to wait 3 months. Oh yeah, but overnight it went 16%. Yeah, but you said 3 months, right? So, 3 months from now it could be up 300%, but you exited at a negative 16%. So you can see what I mean. Short versus long, all that sort of stuff. That, I believe, is the number one killer of good trades. The best way to lose your position and make and lose money essentially is to trick yourself by using a different time frame, starting a trade thinking one way and then ending it thinking a different way in terms of the time. So how long will it take to learn how to trade? I would say that depends, and this sounds like a cop-out, but it's going to depend on you. Like, how much effort are you going to put into this? I've got students who've been with us for years now who are just making money left, right, and center. It's easy for them. And I've got students who come in and after 4 days they ask for a refund, and I'm like, well, how many videos did you watch? And they're like, none. I just thought, well, you're not going to make much money if you don't even take advantage of the educational content. Let me give you a story about my 70, somewhat 80-year-old godmother. She came to me when she was in her late 70s, and she had never used a modern computer, never even, thought about one. What she had done is gone to a little chemist around the corner, and they sold a little digital camera, and she was fascinated by these digital cameras. And it had a real low resolution video function, and it had a couple of still image portrait functions and stuff. And she went to France with her elderly husband, who's also in his 80s, and they had a nice time, and they took a whole bunch of photographs on the back of the camera. And it has a little 2-inch screen. They came back to me, and being the young technical wizard that I am, they said to me, how do I get the photos off the camera and into the real world? They were used to nice printed photographs. And I said, it's a bit of a technical challenge because you don't even have a computer. You may as well just go back to the chemist and ask them. So they did that. I successfully fobbed them off for a little while, and then they came back and said, well, what I need you to do is, I'm tired of doing that now. I need you to advise us on buying a computer. So I advised them on buying a computer. I bought them a computer. We set it all up. I tried to give them a rudimentary understanding of an operating system, all that sort of stuff. And then my godmother and my godfather said, okay, what we need you to do is we need you to tell us how we take the videos and the images off the camera and put it onto the computer and import it into a digital editing suite so I can edit the video, create a fantastic video of all the footage and the still images of our trips to France, and maybe cross-match that with some of our prior trips. I want to put in the titles and the beautiful music, and I want everything. And then I want to burn it onto DVD so I can take the DVD with me to someone's house and show it on their television. And I was like, okay. So you've never used a computer before. You don't even know how to get the photographs off your camera. You're talking about importing it, editing the video, burning the video, taking the DVD. This is like, from a complex point of view, what you're asking is extraordinary. And yet I decided that I was going to teach them how to do this. I knew it would take a long time. The point I'm trying to get to, and I appreciate the fact that you haven't fast forwarded, was that this lady in her 80s with her husband, from day one of me teaching them, she took notes. Not just little blah, 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 scribble notes. I mean notes. Like, what are you clicking there? Click that icon. What does that option do? I mean, it was actually pretty infuriating for me because it took me so much longer to teach her. But every step of the way, she was taking notes. She never needed to ask me the same question twice. She could always look back at her notes and all that sort of stuff. And at the end of the 4-year period, she now makes the most beautiful travel videos, and I think she's 82 and her husband is 84 or something, and they have these beautiful travel videos. The point I'm trying to make is that elderly generation, before the invention of PDFs and blogs and all that sort of stuff, they took notes because they knew that someone like me, someone like the education that we provide, that it's valuable, our time is valuable, so they're not just going to skim read it. To cut to the current day, we have members coming in saying, where's the notes? Where's the downloadable PDF file? I just watched one of your videos. Where's my notes? And my answer is, well, I'll be honest with you. I could make a nicely formatted PDF for you. I'll do all the work. I'll do my own notes for you. And then I'll give you that. And I know what you're going to do. You're going to click the button and you're going to download it. And then you're going to think, well, I'll get around to that later because I just watched this video, so I don't need to study the PDF notes. As long as I've downloaded them, that's the most important. They're in my download folder. I'll get back to them later. No, you won't. And if you do, you won't read them. At best, you'll skim read them. You certainly won't print those notes. You certainly won't print those notes correctly, read it, and write notes inside the printout, inside the margin, highlight certain sections and do all that. So you just won't do that. I just know that because we tried that a few times and people just don't do it. They don't download it. They don't print it, they don't read it, they don't write notes on it, they don't do the annotation, they don't do anything. At the end of the day, what happens is members, traders will try and cut corners. Now, this is my second point. If you're trying to cut corners, if you're trying to be passive, if you're trying to automate all this, if you're trying to put no work in, if you're trying to get to that end goal, remember the end goal on the beach, never having to worry about money again. If you're trying to cut corners and automate everything and make it as easy as possible the whole way through, you're never going to make any money. I'm sorry, you may as well just go try something else, because you just won't make money. This is not going to be that easy. So my point is, do what the older generation did. Take notes. Every time I do a video, sit down with pen and paper, press pause, rewind, press play, take notes. Commit to using all of your senses. You're physically writing. I know it sucks to write with a pencil or a pen, but you're physically writing. You're watching your writing. You're hearing the scratch. You're committing stuff to memory. You're thinking about what you're writing. You're educating your mind. You're memorizing things. You're putting it in context with everything else that's in your mind. You're going through the process of learning. You're learning how to learn. You're actually physically writing notes on how to trade. And something that I say, for example, like consider buying on the 200 moving average. If you've written and committed that to your memory, the next time that 200 moving average comes up, you'll think, I remember writing that down in my notes. I should think about buying some more on this 200 moving average. And sure enough, it bounces off the 200 moving average and you just made some money. But if you don't do that, then you might be like, what was that average? 100 moving average, 300, 4, 5, 7 moving average. I can't remember. I know he said something about it in that video that I watched while I was checking my Facebook messages 3 weeks ago, but because I wrote no notes, I got no knowledge of what I'm doing. If you said to me, why are 10% of the traders successful and 90% not? It comes down to that type of thing, that type of commitment to learning and putting into practice what you've actually learned. So take that inspirational story of the 70 or 80-year-old woman who'd never used a computer before, who now burns DVDs of beautiful trips to France in full high definition. Imagine how much effort that would have taken to do that, and the amount of notes that she would have had to do, and the amount of mistakes that she would have had to do along the way. And imagine that it's going to take that sort of effort from you if you want to be part of that 10% who never needs it. And I know you're probably sitting there saying, yeah, it all sounds a bit scary now, but I know you can do it. You just have to put in the effort. We all learn how to do things in life that are difficult, and eventually you'll come to pass that you're actually really good at trading. All right, let me go down here. So what I would suggest is you really need to think about experimenting as well. So when you take notes and when you think you have an idea, you want to think about experimenting to see if that actually applies to you, the way that you trade, the market that you're trading, the assets. So if I suggest something, or if part of our methodology or one of our educators explains an idea, you want to go and see if it works. Don't just take it at face value that we know what we're talking about. Go and experiment and see if it works. Now, that doesn't mean you need to lose money, but you can, if you want to, lose a little bit of money. Assuming that it fails. You can use paper trading. 3Commas has a paper trading facility. There's lots of other ones. You can actually get a pen and paper and say, look, if I was to follow that methodology, that entry, and I was to buy here, and I come back in 3 days' time, and I was to sell here, on paper, did I make any money? Now, how many people do you reckon are paper trading in our community? You'd imagine, like, what, half of them? No, 10%. Paper trading. Guess what? Those 10% are probably the guys who are going to end up in the 10% that make the money. The other 90% of the people, I'm not going to bother with paper trading. Even if I'm right, I'm not making any money. If I'm wrong, well, it doesn't matter. It's paper trading. I'd rather risk real money. What can I say? If you're risking real money, you're limiting the amount of experimentation you can do. If I was to say to you that learning and experimenting and practicing your failures on paper is a critical part of becoming part of that 10%. You're going to have to fail a lot. Now, obviously, it helps if you're failing on paper a lot instead of failing using real money, because you'll be out and you'll be saying, I can't afford my membership fees, I'm bankrupt, all that sort of stuff. So what you've got to realize is the best traders are wrong a lot. Most of the time they might be wrong 50% of the time. When they're right at a much bigger magnitude, a much bigger level, so they make a lot more money to cover all their losses. The point of being a trader is not to be always right. It's to be able to accept the fact that you're going to be wrong, 50% of the time, and that through risk management and careful entries, you're going to mitigate that loss by making more money. So one thing I'd like to say is don't beat yourself up over the losses. What's the point? What's the point of being emotionally invested in a loss? You lose money, your friends laugh at you, you beat yourself up, you feel guilty, you might go have a smoke, go and have a drink, go and kind of, especially when you knew better, but you did it anyway and then you lost your money and you're like, you know what, I knew I shouldn't have bought it then. It was right at the very top, I got FOMO, fear of missing out. You know, at the end of the day, what you want is kind of like the opposite of that. You want JOMO. It's so lame. JOMO, J-O-M-O, the joy of missing out. You want to feel joy that you didn't buy at the top, that you waited until everybody was selling and then you bought, because at the end of the day, you want to be part of that 10% that are winning. So don't beat yourself up over your losses. What's the point? You know, you have to accept the fact that that's part of trading. We're not here to become the ultimate guy that never loses money. You're here to basically balance your losses versus your wins and end up the winner. Okay, so in order to increase your chances of winning, you might want to, at first, on paper or using your real portfolio, you want to maximize your chances of winning. Now, you can maximize your chances of winning by following our exact methodology, having a very conservative entry and taking a tiny, very slim profit. So many of our calls go 15, 30, 45% in a 7-day period. If I said to you, you just wait for the perfect confirmation to get in and have a 1% take profit, and you slice off 1% of a $500 million volume move, you might only think in your mind, but I only made 1% and the coin went 80%. But the point is, you made 1%. A lot of those traders lost money. So you want to put the odds in your favor to make sure that you're the winner and that you're consistently winning over and over again. So a conservative, very strict entry into a absolute killer coin, and then a tiny, tiny little profit can net you 1%, and you can do that many, many times a month, and you'd be surprised how quickly it all compounds and adds up. So paper trade, be conservative, don't beat yourself up about the losses, and this is already starting to shape how you think. You also don't want to overwhelm yourself. You don't want to be in too many trades at once. You don't want to overwhelm yourself by watching like 150 guys on YouTube and stacking all their advice and information in your ears. You don't want to overwhelm yourself by adding 12 indicators to your charts and just not really understanding any of them all that great. You don't want to overwhelm yourself by allowing sentiment and fundamental analysis and news and rumors and bullshit in your ear while simultaneously trying to understand the technical analysis. You don't want to overwhelm yourself by basically putting too much into a trade and taking too much risk. Just take it cool. Just be cool, you know? Add to your position over time. Subtract from your position over time. Don't just take, you know, excess risk to try and increase your chances of winning. That's not actually how this game works. You need to really understand the concept of statistical significance as well. If we provide you with a way of doing something, or if you learn something and that happens to work, then you might be thinking, yeah, man, that strategy worked. And then you do it again. That strategy worked again, and you do it again. This strategy is amazing. It's worked 3 times in a row. This is the thing I'm going to do for the rest of my life. You might find that although it worked 3 times in a row, the next 27 times that you do it, it doesn't work. But at that point in time, you thought that you were making the right decision. What you hadn't realized is that you hadn't done it enough to get statistical significance. And what that means is that you need to repeat a certain thing a bunch of times before statistically you can prove one way or another that it works or not. Now, I'm here to say that at Blockchain Education, with our methodology and our calls and our members and all that, we've done tens of thousands of calls and signals over the last 3 to 4 years. So statistically significant levels. And when we say something works, we know statistically that it works thousands of times out of thousands and thousands of times. So be careful about what you read on in books and what you learn on YouTube about certain people that are only giving you certain advice in a market that's just doing a certain thing. You know, I found that in 2017, everybody was an expert in crypto because it just kept going up. The uptrends were easy to predict. YouTubers were making wild things. Buy it here, 3 weeks later, look, I told you so, it's up 70%. It's like, well, it's easy in an uptrend. How many people were there like we were in the downtrend? How many people were there saying buy at $3,000 on the reversal pattern? Not that many. So I guess my point is, you want to basically be looking for indicators, methodology, and people to help you who are statistically significant and who have proven that they actually know what they're doing across thousands and thousands, tens of thousands of trades in all sorts of market conditions, on all sorts of time frames, in all sorts of assets. And I can say that the guys at blockchaineducation.com.au and the female analysts, we know exactly what we're doing in that sense. So you don't want to overwhelm yourself. You want to make sure that whatever you are doing is statistically significant and valid. And then let's have a look at some more stuff here. You do want to seek opinion, though. Don't necessarily think that I'm saying that you want to just do it on your own. You need to go and find people to help you, because at the end of the day, there's a wealth of knowledge about trading. You just need to know what is right and what is wrong, and essentially you need people to be able to prove to you that they actually know what they're doing. So I wouldn't be sort of listening to some YouTuber who's got literally no evidence to suggest anything that they're doing is actually successful, or that at best they're doing a 50-50 on Twitter or some Slack group or something. I would be probably more likely to be going with a company like Blockchain Education, who actually has tens of thousands of system calls and a proven methodology that's worked, and lots of people who are standing up saying, yeah, that actually works. So you want to make sure that let's say you read something about something on a blog from some guy versus some other guy who's actually written a book that was edited and published by Penguin on Amazon. I mean, I'm going to kind of trust what's in the book over what some blogger said. Now, keep in mind that even supposedly the best educational resources are not actually helping people make money, because at the end of the day, like I said, 80 to 90% of people are going to we're going to lose money in this market. So, keep that in mind as well. It's not necessarily who's behind the information, but more like, can they prove that what they're doing is actually statistically significant and all that sort of stuff. I think that's kind of about it. Now, I know I talk quickly, and I know you probably thought, everything you said I've heard before. It's all pointless. It doesn't help me make money, all that sort of stuff. This video wasn't really to help you make money. That's what our educational course is about. We've got a methodology, we've got entry systems, we've got automation platforms, we've got people to support you. You will make money if you become a member. What this video was kind of highlighting is that a lot of people are going to lose money. They're going to lose money because they don't learn properly, they don't bother taking notes, they try things that have got no actual statistical significance or no sort of backing or fundamentals. They believe in fundamentals and rumors and rubbish like that. They overwhelm themselves by putting way too much into trades. They put way too much emphasis on single indicators. They stack as many indicators as they can on the thing. They essentially blow themselves up faster than average because they're not paper trading, and a whole bunch of other things. So, like I said, if you come back to this video and you watch it over and over again, many of these points are going to be at the direct heart as to why you might be losing money. If you're making money, you don't need to come back and watch this because you're consistently a winner. But if you're consistently blowing up your capital and making stupid trades and stuff, come back here and watch this video and take notes. I could have given you the notes, but I want you to take notes, because there is something in what I've just said there that's most likely the root of your issues. If you're losing money in this market, it's probably because you're too impatient, you're using a stupid stop loss, you're using the wrong timing frequency on your trades, you're not being conservative. There's 1,000 things that you could extrapolate from what I just said. But at the end of the day, you need to control yourself in this market. It's basically you versus that other anonymous guy. You're the buyer, he's the seller. You're the seller, he's the buyer. It sounds 50-50, but it's not. All right, I hope this has been useful. Obviously, if you want to learn how to trade, join blockchaineducation.com.au. Failing that, if you don't have the money to join and you just want to sort of learn yourself, just watch some of my YouTube videos. Take some notes, you'll learn a lot. Check out our other analysts that are doing YouTube videos. Listen out for free calls. Got a discount coupon. You definitely want to check that out. blockchaineducation.com.au. Talk to you soon.